Hello and welcome to my channel. This video series is going to be an ongoing set of videos that sort of documents my process of learning how to trade. I guess I could say I've been trying to learn how to trade since March, and after trying a few different things, sort of fumbling around, I have converged on swing trading and a set of strategies or trading setups that I think I like to use, and I'm going to be basically continuing to use these setups going forward in an effort to become a profitable trader. So what I'm going over in this first video is my my trades that I have taken really across this range of dates. So since the end of 2020, and I'll be doing weekly updates on the trades taken each week to see which ones are profitable, which ones are losers, that sort of thing. So let's get right into it and I guess fumble our way through it as we go. So first trade, APPS. This was taken January 6th. In retrospect, I really don't like this trade setup, but I didn't see why that was when I took the trade. So the basics look okay. It's got a sort of rising wedge setup, and we have on the RSI negative divergence on the daily chart, and when the price action broke trend on January 6th, I entered the trade, and I think my initial profit target was lower down here, and that's why I took the trade. I really like to keep the profit, the P&L or risk reward ratio above 3, so that I can lose a trade at least twice and still make money. 2 losing trades for every winning trade. But the reality is, this is sort of the first profit target. Somewhere around this range is the first real support level. So that brings our P&L ratio to just a little over 1. So that's the first thing I don't like about the trade. And actually, that's the main thing. I think I would have been fine with the trade if the P or the risk reward ratio was a little bit better. But anyways, I entered the trade on the 6th as it was breaking down below trend. It then recovered the trend and hit my stop level the next day. And I didn't re-enter the trade when it broke trend again because the unfavorable risk reward ratio. So that ended up with me with a loss of $43. And I guess to explain a little bit of my method for setting up position sizing, it's fairly simple. I set trading views, short or long position, I guess widget or tool, and then I set the profit target and the loss target. And you can see how, well, if you double click here, it shows the account size and the risk percentage. So the way I'm doing it is I just say I want $50 risked. So that's 5% of $1,000. And you go from there. Then you set the basically the stop level to a point where it looks like it's above the daily noise. So you can see I didn't get stopped out the first day. Most of the intraday volatility is within this range. And the idea is you don't want to get punched and stopped out. This is still probably a little tight, but that's how I've been doing things, and I guess I'd rather get stopped out a couple of times and keep doing things the way I have been doing than say, well, let's just say an alternative method. Let's say I brought my loss level up here. Now this would be much more difficult to get stopped out of, but the risk-reward ratio gets all messed up. So it would change a lot of things about how I approach this trading strategy. So we're going to try this for a while, see if it works. And if it does, I guess we can do some back testing later on to see if a different method would have been more optimal for causing less losses or basically a greater net profit. All right, so the next trade I took was Altisource Portfolio Solutions, ASPS. And I think I stopped out of this one today. So what you can see sort of on a larger time frame is that it's been going down for a while, but since the March crash, it has been entering a funnel. So usually at the end of a funnel pattern, that's a high probability of there being a breakout. And although I don't have it recorded here, I took the first trade, I think this was a paper trade, to trade this breakout. But it was sort of a breakout that fell short. So I thought, okay, this must be retesting trend, and maybe the real breakout will be after that. Or maybe it was a false breakout and it was a breakdown, or it's going to be a breakdown instead. So when it retested this trend line, I expected a bounce, and we got that bounce. It overshot the trend line and recovered the next day. So that's when I entered the trade. I entered at about, well, I guess 12:37. And then I added to my position thinking, okay, this thing's really taking off at 12:59. I took, I guess the full position size would have been like about 300 shares. I took about a half size position between the two trades because I was not very confident, I guess, in this trade playing out. And also because, well, we got such a high profit target that the profit levels were going to be pretty good regardless. So what ended up happening was the next day I got stopped out of this higher level trade, and then a couple days later, I guess January 11th, which is today, I got stopped out of the second trade. So I think in total it ended up being around a $50 loss. Let's just fill this in. 12, 20. Okay, so I got filled for 11.92, and this was okay. So a little over $60 loss. I think that's a little more than I was hoping for. If this would have been closer to my stop level, yeah, the loss would have been much better. But I guess because this is a lower float stock, my fill was worse than it should have been. So I think this, right now it looks like it's breaking down, but it could end up chopping around for a while longer. So I think I re-entered this position short. Probably the best thing to do at this point would be to sit back and look at what the stock is doing before entering again. But I saw the market going down, and thought I could make some money shorting this. So we'll see what happens going forward. That review will be in a couple days. All right, the next ticker I traded was Best Buy. You can see how this price action, basically similar to APPS, in that there's a rising wedge over that's been building pretty much all year of 2020. Eventually this one actually broke and there were some trading opportunities. The trade that is shown here, the trade that I took most recently on December 31st. So that would have been right back here. You can see how it broke down and then was sort of flagging out on the daily chart. So my expectation was that if it broke this trend level, or broke the support level, it would continue moving down, probably all the way to fill this gap. So it broke support just a little bit, just enough to get me into the position. Next day went my way a little bit more, but then recovered, and over the next couple of days fully recovered and actually broke out instead. So I got stopped out for about a $50 loss. So I guess the good thing about this trade was my loss was not oversized. I could have re-entered this long if I flipped my position, but I didn't get a good entry, so I decided to sit this one out. All right, the next trade I took was Corsair. Now, I'm not really I can't figure out what I was thinking when I decided to take this trade, so I'm going to do the best to kind of reconstruct maybe my thought process to see if we could get a close answer. So this was an IPO back in September. Immediately sort of rose in a rising wedge pattern. Rather than breaking down, it broke out and sort of, I guess, waved around, coming up into December 29th when I decided to take this trade. Now on December 28th, what does it look like? So you have this sort of upper trend line. Yeah, if I saw this as breaking trend and then recovering trend and continuing on, that would have been an earlier trade that I should have taken on December 29th. I'm really not sure why I decided to take this trade. In retrospect, I guess the idea was it would break out. Maybe what I saw was it was entering sort of a window, a horizontal window, something something maybe like this. I don't think that makes sense either, so we'll just have to leave it as I wasn't having my head wasn't on straight that day. What I see now is kind of something like this, where we have this consolidation, a funnel-like consolidation that's building up. Let's get rid of this. And eventually I think it's going to break out. Don't know when. either breakout or breakdown. Most likely breakout because this is a high-flying sort of stay-at-home stock, tech stock, whatever you want to call it. It's got a lot of hype surrounding it, so unless the whole market breaks down, I think it's going to break out, but that remains to be seen. All right, the next ticker is DocuSign. This is one of those stocks that just went crazy since this whole crisis started. Yeah, it's gone up how many percent? 160%, more than 160% since the March lows, or since pre-March lows, I guess. Now, once it's hit this point, it's sort of entered a consolidation period. Kind of it was range bound between this upper and lower range. Now it did break out briefly, but then it failed to break out. So since then it's been moving between this range. Now the reason I entered this trade here was because what I saw was, okay, rising wedge, no negative divergence on the rising wedge, but because it's been range bound for a while, the reasoning was it's going to continue staying range bound, and if it fails to break out, which it did here, then it's probably going to end up coming down to the bottom of the range. So here we see it actually did break out of this rising wedge, and it's right at a point where it's unclear whether that's a false breakdown or whether it's running a retest. So I think this is a low risk area to enter the trade, but a high probability of the trade not working out. So that's that trade. Basically, I didn't wait for confirmation on this trade, which I think I should have. I don't know. I've sort of been going back and forth between waiting for confirmation on trades and preemptively getting into the trades if I can get a good entry, and if indicators are showing a high probability of, or if there's a lot of indicators that kind of show confluence that the trade should work. I think the safer way to go would be to wait for confirmation, but I think we'll give it a couple more weeks before we decide one way or another for that. Okay, so Etsy is another trade that I'm currently in. I entered in Friday, January 8th. This is another stock that's gone quite a, made quite significant gains since March, over 2x, well no, over 3x actually. So most recently it has broken out of the range it was in since August, had a pullback, and this looks like a bear flag or a bull flag, and a breakout from that bull flag. So I actually took the long trade here. I wasn't sure if it was going to break out or break down, so I sort of had prepared that if it broke down, then I would take the short trade. It broke out, so I took the long trade. If you look up the hourly chart, as we were making new lows, you saw positive divergence on their RSI, indicating a likely breakout. Now, this is the profit target I have set for this trade. I don't think we're going to get there. If you look at it as a bull flag, I guess, yeah, then we'll probably get there, and we'll probably go quite a bit past that. You see a 53% gain, and then moving up. 53% would put you way up here. So So this is definitely a conservative profit target if this is a bull flag. I suspect that this might be sort of another consolidation phase though, where looking for a drawing tool. Anyways, we'll just use lines. Looking for consolidate, or it may be a consolidation where it does something like this and eventually breaks out or breaks down after that. So we'll see. I did take a little bit of profit today. I think 1/3 of the profit off the table today, or 1/3 of my shares. I could have taken more, but I took it off at the end of the day. So we'll see if it continues to rise. Definitely isn't showing that it's a strong breakout with a lot of volume because well, the volume itself is low and it had quite a bit of pullback from the high of day. So not the strongest looking trade so far. Okay, the next trade or the next ticker is XP. Basically, yeah, one of the patterns I like to trade is I guess range bound, something that's range bound within a trend. And right now the trend is a rising wedge, but it's not confirmed that it's a rising wedge, but it's likely a rising wedge. And we're fairly early on in that pattern. We don't see negative divergence yet on the RSI. So when I was able to get in here, I guess that's after confirmation that there's a reversal at this support level. It looked like a good trade to make it all the way up to, this 87 level. So far it looks like it's working out at least a little bit in my favor. What I don't like is that today there's some relative weakness, but it's had two very strong days previously, so we'll see if it makes it to that profit target. I did take some, I think I took a little bit, well, I took 3 out of 7 shares off the table yesterday. So that does cut my profit potential down a little bit, or a lot, but it also cuts my risk down significantly. One thing I'm concerned about with me trading more actively like this is that, well, I'm really not letting the winners run, right? I took almost half of the profit, or half of the shares off the table. If this trade were to play out fully, that's $160 of profit. Now, if we cut that size in half, now we're looking at 70 plus 30, which is $100. So I'm leaving about 50% additional profit on the table. And what was that? What would that bring the profit loss ratio to? It would bring it down to about 2.3 to 1, or the risk reward ratio. So I think that this trade, this is something where we're just gonna have to wait and see. It's one of the things that I need to refine for my trading methodology. Okay, Fedex is the next trade that I took. I think this was a probably a poor choice of entry point to take this trade. If I would have taken this trade back here when it broke trend, hold on. Yeah, if I would have taken this trade back here when this broke trend, this would have been a really, really profitable trade. However, I took it when it broke support here instead, and there wasn't much consolidation before the support, so that is why I think it was a more risky trade to take. It ended up working out for me, but I put I guess attribute that to luck more than taking a high probability trade. So I started my position here at this 256.70 level short, and then when it the next day when it retagged support, I added more shares to the short, and let's see, I took some off the table over a couple days, the 4th and the 6th. So that would have been this day, and this day. No, sorry, I took it off on the 8th. I took some shares off on the 8th, and that was because on the hourly chart, you're starting to see, well, at least from here to previous lows, you were starting to see some positive divergence or negative divergence, basically bullish divergence on the RSI. However, I think that bullish divergence is still intact. So I'll probably continue to scale out of this trade as the days go on, or get stopped out, one of the two, with the last little bit of the trade I have on the table. My original goal was for this trade to move all the way down to this level, because there really wasn't any pullbacks along the way for this ascent. So usually a stock will fall just as fast as it rises. Now there are support levels back here, and those may I don't think they will be, I don't think they're as significant as the most recent support levels, so they may or may not play out. I'm not really sure about that. Anyways, I don't think I will stay in this trade until here. Probably what would happen is this will reverse at some point, retag support, or I guess resistance in this case, and then continue down, or it'll turn around and keep going back up if we continue in this raging bull market that we've been in. Okay, now this was a trade that I had no business taking, Fubo. Basically what I saw was this stock was, in a rising pattern, had a blow off top, broke trend on the way down, and then hit support here. And my expectation was that it was going to retest this trend line. So far it has not done that, so I've been basically scaling out, taking small losses along the way. Like I said, total of about $8 of loss. So it didn't end up hurting me too much, but I wouldn't be surprised if this stock, jumps down a huge amount tomorrow. And it could be a good setup for a short, but I really don't like taking a trade after this much consolidation. So I think the smart thing to do in my case is to leave that trade be, or leave that stock be, and maybe revisit it after after the stock has established some new trend for a while, whether that be consolidation or a rising or falling trend. All right, Gdxj. This guy has been a pain for me, to say the least. I have a lot of losses that I can attribute to it. So maybe it's partly because of my sort of bullish bias on gold and the miners, but I've taken a number of trades on December 30th. Let's see, what do we do? Okay, so yeah, this is only showing the most recent trades that I've taken. I've taken more before this, but you can see we had a breakout, or at least it looked like a breakout on December 30th. I took this trade at the 65.26 level, is that right? No, the 54.75 level. So right about here. This stock the next day began to pull back, and I sort of had second thoughts about trading this ticker. I thought, well, what happens if it gaps down, a huge amount to here? I'm going to have a way oversized loss. And maybe the proper way to approach this would have been to just take a smaller position size. So then the next day, it gaps up instead. Well, January 4th. Gaps up. I decide, okay, this is definitely a breakout. I'm re-entering the position. So I take a kind of a smaller position size, 28 shares, but it's at a pretty bad level. So I ended up closing it on the 6th. I guess my stop level was pretty tight. No, I didn't even, what does it say? Okay, yeah, so it didn't look strong, so I actually took a full position here at the 57 level, and I cut it in half on January 6th. And then I think I got fully stopped out on January 8th. Yeah, when this thing just tanked, I got completely stopped out. So I took a pretty good size loss between those two trades. January 7th, I doubled down on my position, adding 28 shares. And then January 8th, I got stopped out on that as well. So then January 8th, I entered the position again because, well, probably this is where I should have waited to enter the position anyways. Just either let this trade go or wait until we get a retest of support to enter the trade. So I entered the trade again right at the trend level. Today, January 11th, we broke out of this. I think I am still in this trade, but yeah, I think I have my stop level set right around the 200 moving average. So if this is a false breakout, then I'm going to get stopped out again for another loss, which, yeah, I would say that's fairly oversized loss in Gdxj, but if I remain in the position with 28 shares, which I believe is how many I'm holding right now. I guess the question is, will it end up paying out for me? Gold's had quite a bit of consolidation. If it is in a bull market still, then we're probably going to see a flagging pattern, something like this. And we'll be up here somewhere. So I think that if this trade does play out still, I'll still be net profitable on this, but it will have been a mess to get there. All right. So this next ticker is M, Macy's. This has been in a rising wedge kind of pattern, or at least that's at least what I make of it, is a rising wedge pattern since about March, or since about June. We're getting pretty significant negative divergence on the daily chart. And so I guess there was a false, what I thought was going to be a false breakout, so I decided to enter a position if it broke down below that. And you can see it just barely did. My entry was at 1198. I think it fell down to 1195 or so. Next day, no, not even next day, the same day, it reverses direction and stops me out. So that trade didn't work out. I think my position entry could have been a little bit looser. So I ended up entering another trade. Well, I have another order set up to enter the trade here, and you can see, let's see, am I in this trade? I don't think I'm quite in. Somehow I avoided entering this trade, but my position entry is here, and so if it breaks down below this level, then I'll be in the trade as a short again. All right, NIO. This is one of the high-flying electric vehicle stocks. And you can see, well, the gains on this one have been astronomical. 1800% winner for basically the year. More if you got in at the lows. And so recently, it sort of has gone into this consolidation pattern, and it broke out January 4th, clear breakout. So I entered the trade long. Well, it was a breakout, but the volume, the impulsive volume, buying volume wasn't there. I didn't know that when I entered the trade. I just wanted to get a good entry, or as good as an entry as I could. I think the entry would have been the 31st if I were to get a good entry. But this is what I ended up getting. Over the next 2 days, the 5th and the 6th, I saw that there was no follow through on the volume, and that was sort of being hitched up by, I guess, what's now this upper trend line. And so I started selling out, and I closed that position. On the 6th, when I saw the market tanking, I thought this was a reversal signal, so I ended up going short. I did not get stopped out the next day. I think I got stopped out. Yeah, I got stopped out on the 8th because of this gap up. So I think my idea was get an entry. What was my entry? 51.54. So initially that was looking pretty good. It looked like it was going to continue falling. But because I guess my plan was to hold it until it broke down here. So this was sort of a preemptive, because it didn't break this support level yet, you could say it was a preemptive trade. And yeah, I didn't jump out of the trade the next day. I probably should have jumped out, or at least sized down on the trade the next day after seeing that the impulsive selling did not continue. But anyways, it gapped up a couple times. Now it looks like it's actually going to sell off, possibly, but I think it's too early to tell. Like, I don't really see a good entry for this based on what I've been trading. So I may just leave this be until it comes back down to support and consolidates for a while. Okay, so Nike was another stock that I tried to short on the 4th. What I was seeing was, same rising wedge pattern that I was seeing on a lot of these stocks. Let's see, we had negative divergence since about September. And we saw this, well, there was this false breakout and then consolidation here. And so I figured if it broke below this level, that was probably going to cause, a further sell-off. So January 4th, I entered the trade short at about $140. Started going in my way for a bit, turned around, went the other direction. I got stopped out. So January 6th, I wasn't going to give up. So 142. Yeah, I think when I saw this go up, reverse, I entered short, something like that. When I saw it getting stuck at resistance again, I went short. I don't think that was a good idea. I probably should have waited till confirmation, but what did I have here? Okay, so that's what happened. I meant to set the order as a stop order if it broke below support again, but I got the order entry wrong and it ended up being just a limit order, which was good for me because my stop level, I didn't lose as much when I got stopped out the next day. And you can see this still punched through where my order entry would have been. So I guess I got lucky there, but I also probably should have put the order entry a little bit lower, and then I would have never entered the trade and made that loss in the first place. I think this is still a setup for a short trade. This negative divergence is probably going to be intact. I wouldn't be surprised if it tries to punch a new high out, succeeds in punching a high out, but doesn't actually stay there, makes another sort of topping candle, and eventually we're going to get a breakdown. That's my suspicion. Okay, next up is Plug, another really high flying stock. Has made pretty significant gains since since the beginning of the year 2020, and we were just climbing up this trend channel for the longest time. We made a false breakout here towards the end of December. I entered short right here, January 4th, and I guess this was another preemptive trade. Well, yeah, it was preemptive. I think, planning on trading it to the bottom of this level because it was a pretty well-defined trend channel. And then if it broke down, I would hold some shares. If it didn't break down and bounce back and recovered, or continued bouncing around the trend line, I was going to cover the position. That didn't end up happening. Basically, the stock on January 4th a false breakdown down. January 5th continued going in my direction a little bit. Looked like it was gonna. So January 4th wasn't a false breakdown. It was just the start of a downward move. January 5th was, I guess, the reversal, and then I got stopped out. I think, yeah, it was on January 6th. So January 6th, I saw this, saw the price punch through resistance or the trend channel, stop, and then end right at that level. So I thought, okay, it's probably going to actually go down this way this time. What I didn't look at, well, I'm not sure what the catalyst it was for the gap up, but the stock did gap up, and obviously I got stopped out and took a very, very oversized loss, about a 3x oversized loss, which is really bad. That would have wiped out the profits even if I did get a winning trade. So yeah, not doing too well on that one. Peloton, this is another one of those stay-at-home stocks that's gone absolutely bananas since March. And let's see, what I guess in recent months it's sort of shown signs of weakness, negative divergence on the RSI, break below trend, one attempt to recover and failing, and now it's sort of just drifting along. January 4th, okay, so January 4th I took a short trade. What did I do? Okay. Okay, so January 4th was the market drop off. So I think I preemptively entered this trade expecting Peloton to sell off if the entire market was selling off. However, you can see it jumped below support, it broke support, and then it recovered on January 7th, and that's when I decided to cover for basically a break even. This is still a trade I want to short, or a stock I want to short, and I'm actually in a short position now. We'll recap how that goes towards the end of the week or at the end of the week. Okay, Snap's another big name that's been raging. Since this gap up in October, this has shown some pretty significant signs of weakness. Again, negative divergence. Sort of this weird, well, kind of a flagging pattern, but it doesn't look much like a bull flag. It looks more like a wedge than a flag. So let's see, I went short on this January 4th, and I think it was because of the market drop. I just wanted to add some shares to this short, assuming the whole market was going to drop, then that was going to be the catalyst for this short. Yeah, so it was basically a preemptive position entry before confirmation. You can start to see a pattern. None of these trades that I have not waited on confirmation for have worked out, but it's all been within a week or so time range. Okay, so I entered short on the 4th, got jumped out on the 5th, and then on the 6th, I entered short again when it was breaking below support. But that didn't work either. On the 7th, obviously, the price action jumped, and I got stopped out, or I jumped out, one of the two. January 8th, I've shorted it again, and I think today I would have gotten stopped out again. Yeah, so January 8th I entered short again. Why did I enter short on the 8th? Oh yeah, because it broke trend and then it ended the day below trend. And so I thought it was a low risk area to enter short. But of course then I get stopped out again. So at this point, what's that, 2 or 3 trades that I haven't waited for confirmation on this, and I just keep getting caught up on this. So that's probably another $30 to $50 loss that I took on it. So far, the entering a trade before confirmation hasn't been working, but if you look at I think the QQQ is the most prominent example. What I was seeing until the recovery of this breakdown was this. You have a rising wedge pattern, negative divergence on the daily chart that's been going back for quite some time, I guess at least since September. And on January 4th, you had a breakdown. So that was sort of my signal to get short on everything that looked like it might break down. And that's why I sort of preemptively entered a lot of these trades. Of course, after a couple days, it recovered and now it's making new all-time highs, maintaining that negative divergence. And now this wedge pattern no longer looks valid. It now looks more like a channel that we are in. Regardless, I think we're gonna, we have to break eventually this trend. Maybe we'll have a blow off top. It looks, yeah, maybe we'll have a blow off top and then break down, or maybe it will just break down. Until then, I'm sort of going to be short biased. Okay, Spirit Airlines SPR. This is another ticker that I preemptively went short on. You can see how this was one of the stocks that didn't recover until October or November. Crazy gap up. Then it's just been grinding higher slowly, making negative divergence. Well, negative divergence here. We don't actually have negative divergence on the most recent high, but it's very, much decreased momentum for matching the high. So it looks like a double top. Again, I didn't wait for confirmation for this trade. Confirmation would have been breaking below this most recent trend line. I'm still in this trade with a stop level up here. So it looked like it was going to break down today, then it fully recovered. Okay, so Tesla is a stock I should have stayed out of entirely, I think. I have lost way more money than I have earned on this stock or gained on this stock. Yeah, this is almost a 10-bagger in a year. But anyways, everyone knows about Tesla. What I was seeing was basically negative divergence on the daily charts, new highs, lower momentum, So when it broke out the most recent time, 12:30, well, I guess at the top of this range, I entered short, got stopped out the next day. 12:31, I entered short again, got stopped out on January 4th. Then I shorted a third time, January 4th, and January 7th, I got stopped out. So this thing just keeps going up. Now I can't short the stock because it's hard to borrow, so we're probably going to just sit on the sidelines and wait. I think the approach for shorting Tesla, I mean, if you can get a good entry at the break of trend, that might work well. It doesn't look like that's going to be possible. There's, I mean, even after this unconfirmed falling price action today, it is hard to borrow stock. So on most platforms. Additionally, I guess as a bubble goes, if people start to rush out of it, it's probably going to be a big gap down, and most of the selling action will happen pretty quickly. So we'll continue to watch it. If we can get a good trade and borrow it, we'll try to short it again. But I think I'm done preemptively trying to short this. Okay, VNRX. This is a different pattern from the others. Basically, I was playing this consolidation pattern, or this funnel type consolidation pattern, and I think the ideal entry would have been, either right here when it's just starting to break out, or right here when it did a retest of support. I ended up getting in just a little late. What was my entry? It was 363. Yeah, so not a great entry. And the next day I saw it start to dip, so I panicked and jumped out of the trade. I don't know if I panicked or if I hit a stop loss, but yeah, I just didn't feel comfortable with the entry I got, so I jumped out of the trade for a loss the next day. I think that even though this looks like these are really nice patterns to trade. I mean, if you would have gotten in at the beginning, you could have gotten something like, a 4-to-1 risk to reward ratio on that trade and still have a nice, pretty loose stop set on that. So these types of breakouts tend to be very nice to trade, but I went up and chased that trade when I didn't get a good entry. So yeah, that's basically a throwaway trade, throwing away money. Lesson learned. Question is, how many times we'll have to learn the lesson before it sticks. Okay, Zoom. I think this is another unwise trade that I took because I basically took it right. I took a very bad entry. There was no consolidation before it broke support, and which means, there's probably not going to be very much momentum behind the trade. So here's what happened. Obviously Zoom has been a high flyer for a while. It's had a nice long pullback going back since basically September, and there's this gap at I guess, a support level at the gap, and I saw it break that level. So I thought, okay, now it's going to fall down to this support level. So I got in for a short position. Next day, stock moves up, stops me out. And yeah, that's a losing trade. If I would have looked at this more closely, I mean, this looks like a falling wedge pattern, which could end up being a bull flag pattern. It looks very much like a bull flag. I wouldn't want to short this position, knowing what I know now. Even with a little bit more consolidation, I think most of the selling energy is out of the stock, unless the overall market sells off. Then there's, it's very likely that we'll get some more selling. But yeah, this has already dropped from the highs 41%, which if you look at it the other direction, we're going to have to make back about 70% to make that profit back. So yeah, this doesn't look like a setup for a short. Maybe if it breaks out, it's a good trade to take. But it's something to assess the overall market with. It looks like a nothing trade right now. All right. So that sort of wraps, I mean, that's the trades I've taken in the past couple weeks. Really, a lot of bad trades were taken. I think the biggest issue is, one, I wasn't waiting for confirmation on all of these trades. I think I was letting my market bias take over too much. Once in a while, I suppose it's okay to enter a trade before confirmation, but probably it would be good to have more experience before I went and started doing that. The other takeaway is, well, don't take trades that don't really fit my patterns. My patterns that I like to trade are, one, break of long time trend lines that have been consolidating for at least a month, maybe ideally a couple months. Breaks of those trends, whether they be flag patterns, whether they be just basically rising patterns, wedges, it doesn't really matter. Second trade I like to take is these funnel patterns when they break out, and really that's about it. Oh yeah, I guess the third trade I like to take is bounces between trend channels, whether they be horizontal channels or diagonal channels. So those sort of three setups are what I need to continue limiting myself to, and I need to start waiting for confirmation. There's details like setting my entry and stop levels a little bit better so they're not within the volatility of the day-to-day volatility of a stock. But I mean, there hasn't been a single example in this set of trades where that would have mattered. So going forward, those are some takeaways. Let's just add up our P&L. Yeah, we're down about $1,000, which is not good. We got to turn that around, but yeah, we're learning, we're living. Let's